Yeah, good evening, everyone. GCB is one of the listed companies in the Ghana Stock Exchange, as I said from my previous video. Here is the key information of GCB. The name is GCB Bank PLC. PLC just means public listed company, and ticker. The ticker more or less like how the company is being represented within the stock exchange. GCB at capital of 4.77 billion and outstanding shares of 265 million. So you have to take notice of the outstanding share. That's 265 million. So let's continue. Here is the earning and the revenue. So revenue is more or less like what the bank is able to generate, and the cost of revenue, the expenses, the amount of money they spend in order to generate the revenue. That's what we call the cost of revenue. And we have something like gross profit. So gross profit can be calculated by subtracting the cost of revenue from the revenue, and that's going to give you 5.4 billion. So that's the gross profit. Other expenses may include what they use to pay their workers, marketing and advertisement and all those stuff. That will come in to other expenses. So to calculate for the other expenses, you have to subtract the amount spent on other expenses from the gross profit, and that's going to give you the earning. So the earning is 1.9 billion Ghana cedis. Now if you are to calculate for the dividend, that's earning per share, which is called the dividend. So if you have to calculate the earning per share, you have to pick the number of the earning they have generated, which is the 1.9 million, divided by the total number of shares, as I said, as 265 million. So in total, you are going to get something like 7.17 Ghana cedis. So that's how we calculate earning per share, which is likely to be the dividend. So meaning if you had bought 100 shares in GCB, and that to pay the dividend they pay not long ago, meaning you are going to gain 17 pesos in each of your share. If you are having 100, maybe you multiply 100 by 17 pesos. That's the amount of money you are going to gain from the dividend. So let's move to its financial position. You can see GCB is more or less like focused on a long-term goal rather than a short-term goal. So what it means by a long-term goal means if you are an investor and you are eager to just invest and take your money out, probably you might not earn much as if you had allowed your money in the bank. Like assume you bought the stocks, so if you are interested in buying and then selling within a short possible time, it might not favor you. Looking at their short-term goal, you see they're having asset. The asset is around 14 billion and liability is around 43 billion. You can see it's not good. The asset does not match with its liability. So asset is more or less like things they can sell to get money within a year, and liabilities are things maybe they are borrowing. It can be loans, it can be buildings and all those stuff. So those are their liabilities, and same thing applies to the long term. So you can see that with the long term goal, GCB is having asset of 36 billion and liabilities of 1 billion, so which is a good sign for investors that are interested to invest in GCB for a longer period. So let's move to the top shareholders. If you are to look at GCB, there are 11 top shareholders in GCB. They own about 46.56% of the company. The first one is Social Security and National Insurance Trust, which owns about 29.9%, followed by Daniel Ofori, which owns about 7.5%, Cocobot Tier 3 Pension Scheme, and many more. These are the top shareholders in GCB. So let's move on. So breakdown of the shareholders. Private companies, these are private companies. They own 1.27%, which is around 2,600,000. Individual insiders, they also represent 9.67%, which is 19,868,261 shares. And we, the public, which we represented, is 6.1%, which is around 74,142,293 shares. And the institution also owns 53%, which is around 108,784,138 shares in your earning per share. We just pick the amount of money they generated at the end, maybe the revenue or the earnings, divided by the total number of shares. That's going to give you your earning per share, which is likely to be the dividend. So the earning per share will then be multiplied by the total number of shares you are having, and that's going to be your dividend. So if you are interested in investing in a company, you have to do your research before you invest. These are things you should look at from companies before putting your money in there. Thank you for your time. Hoping to see you next.